China buys U.S. soybeans, and the USDA report day may be bearish for corn, soybeans, and wheat. We'll take a look at that in just a moment. Welcome back to Your World in Agriculture for January 11th, 2026. Thanks to our sponsor, Imogene Ingredients. Farm markets on Friday, January 9th, corn closed slightly lower, soybeans closed slightly higher, and wheat unchanged. Now, there was some news on Friday. China reportedly bought 10 cargoes of U.S. soybeans, totaling 600,000 metric tons for shipment in April and May. This brings China's original pledge of purchases of 12 million metric tons by the end of February to nearly 10 million, first reported by Reuters on Friday. We'll see how the markets react on Monday. Meanwhile, speaking of Monday, the USDA will release its January crop production, also its WASDE, and quarterly grain stocks report. So a busy day ahead on Monday. In general, large on-hand supplies and large crop estimates are expected in these reports, resulting in a bearish sentiment for corn, soybeans, and wheat. That report and those numbers and that data will come out on Monday at 11 o'clock. Let's go to the charts. Again, the Ag Aero Advisory LLC group offering up these charts for us for the net weekly sales report as of January 1st. We're seeing that the net weekly sales for corn on January 1, 377,600 metric tons. Now, the pace of total commitments right now ahead of USDA's projection for the 2025-26 marketing year, up 30% versus a year ago. By the way, Mexico and Japan, the bottom left chart showing the two big buyers for corn. Now, net weekly sales for soybeans as of January 1, 877,900 metric tons. For soybeans, as you take a look at the pace of the total commitments, the pace is about 29% below a year ago. Right now, 64% of what the USDA had projected. And as you see in the bottom left, and keep in mind, the USDA is now up to date with their weekly export sales and the commitment of traders reports, but we're seeing large purchases from China now in the last couple of weeks. Soybean oil. The top left chart showing as of January 1, 24,900 net weekly sales that week. The pace of total commitments around now 70% of what the USDA had projected for soybean oil's marketing year. So fairly strong pace right now for total commitments. And keep in mind, the total commitments is a result of combining and adding together the outstanding sales plus the accumulated sales up to this point. And so that's how you get the total commitments of sales. Bottom left chart for soybean oil, India and Mexico, the big buyers of U.S. soybean oil right now. Soybean meal, as of January 1, the net weekly sales that week, 158,100. Were our pace of total commitments now just over half of what the USDA has expected for the marketing year, so not that great. Philippines and Mexico, along with Colombia, the top three buyers of U.S. soybean meal. Now, for wheat, we had about 118,000 metric tons of wheat sales on the week ending January 1. The total pace of commitments now up 18% versus a year ago. Right now, 82% of what the USDA had projected for the marketing year. Mexico, the bottom left chart, showing that Mexico and the Philippines, the top big buyers of U.S. wheat. Now, a couple of other things to note here. The commitment of traders report I was trying to spit out. That was also released on Friday, and as I mentioned, the USDA is now up to date with this report that comes out on Fridays. This shows where the outside money is in the agricultural commodities. For corn, the managed money as of January 6th is showing that the managed money investors are net short the corn market. Now, that's a reversal from last week's position, and also the managed money, they've been net long, which is a bet that the market will go higher. They've been net long for many, many months. However, on Friday, they flipped to a net short position, which is a bet that the market will go lower. So that was an interesting aspect of Friday's commitment of traders report. Now, meanwhile, for soybeans, the outside investors are net long by about 57,000 contracts. It was a cut, though, from 110,000 last week. So they are adding to their to their short position. So in other words, you're getting less bullish on the soybean market. Soybean oil, the outside investors are net short. Again, a bet that the market will go lower by 66,000 contracts. That was little changed from a week ago. Soybean meal, outside investors are net short by 20,000 contracts. They added 14,000 of those from a week ago. For wheat, the SRW market anyway, for futures and options, the outside money net short the market by 107,000. That's an addition to their net short last week of 92,000. Crop weather, mainly in South America, it's favorable. Rainfall is hitting Argentina this week and also parts of central Brazil. Cattle, hog, and poultry producers, listen up. If your livestock have scours, Imogene Ingredients has a product called Pharmatan that stabilizes the digestive process. It can save your animal, increase immunity levels, and improve general health. Decrease your scour cases today by contacting Imogene Ingredients at 515-745-1639. Visit ImogeneIngredients.com. Hey, be sure to subscribe and like Your World in Agriculture for more farm content. I'm Mike McGinnis.